In this video, I'm going to talk about an extremely simple strategy that will leave you being extremely accurate trading gold. This will change your life if you fully immerse yourself and become the gold trading wizard. The best part is you do not need deep confusing analysis. It's all about recognizing only 3 steps and you get your entry. Everything worth doing requires patience and discipline. Remember, every lesson you learn will only transform into results when you master patience and discipline. The 3-step entry strategy will work on gold on the M5 time frame, and you will only need 4 indicators, and it's tradable on the phone as well as it has clear targets. You only need 1 asset class, 1 time frame, 1 pattern. The only thing that will stop you from succeeding using this is yourself. Try not to stand in your way when you start implementing it. So what exactly is the 3-step gold entry strategy? Let me explain. A lot of traders hate indicators. For the past 15 years, I've been trading the markets. These have been my run-to-twos, which removes subjectivity, and they always tell me a story. We say indicators always tell a hidden story of the market. They don't predict the markets for me, but they give out valuable information and expose what the market makers intend to hide from you. All patterns are clearly drawn out. They don't predict, but they give you information and expose the hidden patterns. Here's the indicator array that you're going to require. You're going to require 5 EMA, 13 EMA, 50 EMA, 200 EMA, and last but not least, TDI, which is the primary indicator that you're going to require. Step 1 is to observe or hunt for the TDI shark fin. This TDI shark fin is basically defined as the point where the RSI line in green goes outside the bands and get back in. We can see the RSI line went outside the bands and went back right in. This is a sign that probability of reversal has risen, and we now need to get ready for step 2. The components of the TDI are the volatility bands, the RSI line, the signal line, and the moving 50. Basically, we will need all these combined together. You can download using the link that I've left in the description box below and get yourself a free TDI already set up. Step 2 is basically pattern identification. We now want to see an amiable M or W pattern with clear distinct legs. The first leg must correspond to the shark fin on the TDI, and then the second leg must be inside the bands. Second leg must be inside bands on the TDI. Each leg must consist of a 513 EMA cross, which is seen here to confirm that it has logged, and another 513 EMA to confirm that we are in creation of the second leg. And then entry is supposed to be done when a candle closes below the 13. Sometimes the entry can be done early when we see a proper candlestick reversal pattern on the second leg region. Step 3 is now basically to filter for non-trending entries. After the pattern has been recognized, we need to filter for counter trending in step 3. This is done by only taking buys when 50 crossed 200 EMA and the vice versa. When 50 crosses 200 EMA to the downside, we'll be looking for sales. So basically, this is the arrangement of the pattern and the TDI. We want to see 50 200 EMA cross to the upside, and we start to hunt for only low shark fins or only oversold shark fins, like in this particular case. When a shark fin has been issued, we want to see a pattern that corresponds first leg to the shark fin, second leg that is inside the bands, and 2 513 EMA crossovers, and then closure above the 13 will actually give us an entry. To understand fully, we need to see this on real charts. Let's now jump over the charts, but before we do so, I'm personally inviting you to my one-on-one mentorship program. If you are serious enough, then this is for you. If you fail to make money with my guidance, then you'll get your money back. Secure a seat by using the link that I've left in the description box below, and we'll to work on your financial freedom. So this is gold against US dollar, and we are going to continue from where we left. We have actually said an M or W pattern in the direction of the 250 EMA cross, and that M or W pattern must have 2 513 EMA crossovers, with first leg having a shark fin or an overbought or oversold shark fin, and the second leg being inside the bands. So here we can see that there was a pattern that was issued. We can see a crossover of the 1350 that was issued here, and after that we can see first leg, then second leg being corresponding to the shark fin and the leg inside on the TDI, like that. So our entry should be at candle close above below the 13 EMA, which was this one, and the market went our way like that. So we look to get an exit when we get an opposite shark fin. So like in this particular case, an opposite shark fin was issued at this particular point. That is where we were looking to make an exit. So this was on the 5th of August 2025. On the 6th of August, a pattern was created. We can see there was a crossover of the 50-200 EMA like this, and after that we can see first leg being issued at this particular point where we had a shark fin, and then second leg right inside the bands, and the market actually gave us an entry point at this particular point. At the opposite shark fin, which was issued here, that is where we were looking to get an exit. That was on the 6th of August. A 2R was issued. However, there are points where you are going to lose. In this particular case, you can see there was a crossover of the 5200 EMA, and after that, a shark fin was issued for this leg, and this was inside leg within the bands. And we can see the market went straight right to our stop loss. But that doesn't mean it's actually a poor strategy. We can see here, we had a shark fin that was now on the 7th of August, and we had this shark fin and a leg inside, and the market actually gave us a move to the upside since there was a 250 EMA cross to the upside, basically like that. On the 8th of August, we had a beautiful pattern again. Since the EMAs were still, the crossover was still upside, we can see that the first leg had a shark fin and 513 to the upside, 513 to the downside, and then after candle closes above the 13, we actually had a very good pattern to go to the upside like that. Still on the same day, on the 8th of August, we actually had the shark fin, and this was the first leg. After the first leg was issued, second leg was issued. Unfortunately, this trade was likely to end up as a break-even trade because it went into the profit, but later they went back right to our entry price and consolidated for some time. We had another good entry. We had a shark fin after this 5200 EMA cross to the downside, and after that we could see a shark fin, one leg outside the bands, one leg inside the bands. Opposite shark fin, we're going to exit around this particular point. A 2-to-1 reward to risk ratio was going to be satisfied. That was now on the 11th of August, same month. So you can see that this particular trading strategy is going to give you a lot of trading opportunities. If we keep on looking, we can see that there was another scalp entry here where we had this particular leg and this leg, since there was a shark fin here and a leg inside the bands. So basically we are saying this is actually a very powerful trading strategy which you can actually make and pass a lot of prop firm accounts if you are disciplined and serious. All that is required is for you not to stand in your success way. On that note, we've come to the end of our today's video. Please check out our free Telegram channel. I'll leave the link in the description box below. I share free signals, free advice, as well as free tips and motivation. See you on the next one.